Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. David Kuo, founder of the Smart Investor out of Singapore, is our guest today. David, good afternoon.
Hey, good afternoon, Brian.
Now, I'm going to get back to you shortly, David, after we take a look at cryptocurrencies and regional stock markets. We start with Bitcoin, that's at 22,268.9. It's up 5.32%. Ethereum is at 1,210.26. It's up 6.4%. Now, looking across the regional stock markets, the SGX is up 1.1%. And if you could just give me a second, let me get the some of the other markets on air. We've got the KLCI is up 0.63%. Shanghai is up 0.2%. The ASX All Ordinaries is up 0.22%. The Nikkei is up 0.88%. The Hang Seng Bucks the Trend, it's down 0.82%. And rounding up the numbers, we've got the Kospi, which is up 0.92%. David, what's your view on market performance in the first half of the day?
Right. I think it's a classic example of it's better to travel than to arrive. And of course, the big event yesterday was the Federal Reserve raising its interest rates. And prior to its raising of the interest rates, many people had thought the Fed would increase it by only 0.5 percentage point. But as we edge closer towards the interest rate decision day itself, many of the economists, the experts, were saying that it was more likely to be 0.75%. So it seemed as though it was pretty widely flagged. Had it not been widely flagged, I think the Asian markets would have been shocked by the level of increase by the Fed. But as it turns out, it was so widely flagged that everybody was quite comfortable with it now. And so Asian markets, apart from Singapore, I think is pretty muted at the moment. People are just sort of quite content that the Federal Reserve is acting to increase interest rates in order to damp down on inflation. Then, of course, we're going to get this spell, Brian. And then this time next month, we're going to be having it all over again. A bit of tantrum as we head towards the Federal Reserve interest rate increase and whatever falls out after that.
Well, and the thing is, so this is essentially what's going to be if next month is predictions are proved correct, and there'll be another 75 basis point increase. We're going to essentially have an increase of 1.5% in interest rates just over a 2-month period. How is that going to look like across the Asia Pacific region as governments focus on trying to control food inflation in particular, but overall inflation as a whole?
Well, I think the point is, even if they do increase by another 0.75% in July, it's still not going to be enough, Brian. They still have to do an awful lot more. And that really was the subtext behind what Jay Powell was trying to tell the markets, that they will be very aggressive towards increasing interest rates. So I think, companies need to be very aware that interest rates are going to be on the rise. And in particular, companies that have huge amounts of debt or require funding need to be very careful. As a side note, Brian, I just saw on the news wires this morning that Revlon, the cosmetic brand, has filed for Chapter 11. And it just goes to show that no company is immune. Wow. If you carry debt, and in the case of Revlon, it's about $3 billion worth of debt, you're going to hurt. And in the case of Revlon, they also suffered from changing consumer tastes, being usurped in some ways by some of the smaller players in the cosmetic industry, and they were also hurt by the supply chain disruption. So there's going to be a lot of turmoil in the market, Brian. And anybody that is investing in companies need to, number one, look at their balance sheet very, very closely and just see how much debt they have on there, whether the debt is going to be able to be serviced by the company. And then secondly, have a look at their top line revenues, if it's being eaten away or eroded by competitors, and do they have that ability to raise prices? And I think in the case of Revlon, it was everything happening at the same time. They don't have the ability to raise prices. They have huge amounts of debt. then they also have, the supply chain disruption. So I think it really is a lesson for all investors.
And David, it just brings to the fore the fact that we're just in the early stages of rate hikes. We're going to see a lot of companies going under just because they're not able to service their debts. But I want to ask you about how we should react also beyond looking at just the debt issue. And that's now something that I'm going to look at on a couple of companies. But let's talk about the Warren Buffett school of thought and what you talked about in an article that you just published on the Smart Investor, which you can check out on the Smart Investor website. You alluded to the fact Warren Buffett says he doesn't care really about what's happening, but really to just look at the companies itself. Could you tell us a little bit more about his philosophy?
Okay, it's not just Warren Buffett, but there's another great investor called Peter Lynch. And both of them are of the same mind, which is that we are at some point in time going to have recession. I mean, that is the way the economy works. And any central banker, any government leader that says, oh, we've solved the problem of recession, there is going to be no boom and bust, they are completely wrong. We are going to get moments when the economy grows very quickly. Then we're going to get those moments when the economy starts to decline, and then we have a recession. Now, in the case of the Federal Reserve, we know it's going to engineer some kind of recession because that is the only way that they're going to be able to break the back of the inflation cycle that we are in. And so as far as Warren Buffett is concerned, he looks at businesses. He says, how is this business going to perform? How is this business going to be able to generate revenue? And that really is the secret of investing, not only in the case of Warren Buffett, but also in the case of Peter Lynch. And Peter Lynch once said, that anybody who doesn't think there is going to be a recession is not ready for investing. When you are investing, you have to be ready for it. We don't have an awful lot of time today, but one day I will share with you a story about a restaurant in Cambridge, right? And how it was able to ride out the recession. So maybe next Thursday, I will relate to you this story, and it's called The Secret Sauce. And in the case of Warren Buffett, in the case of Peter Lynch, and also in the case of myself, I look for companies that have that secret sauce. And if you find the secret sauce, then you will actually find yourself great companies. And that really is what Warren Buffett is talking about. Look at the business. Don't look at the economy, because good businesses will be able to ride out good times as well as bad times. And there will be moments such as now when we are in a pretty bad time. Some companies will actually survive very well, Brian.
And I'm going to make a note of that to make sure we discuss the secret sauce in next week's Asian Midday Market Watch on Thursday. Now, thanks for coming on the show, David.
You're welcome.
Now, we've been speaking to David Kuo, that's founder of the Smart Investor out of Singapore, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Please subscribe and like our various platforms. Thanks for tuning in.